Yeah, all right. All right, I'll talk to you later. Have a good one. Sorry about that. I was talking to nobody, so you think that I would have friends. I'm just kidding. I don't have friends. All right. Well, yesterday we talked about 10, 15 good stocks you could have played. We'll go over a few of those today. If you were watching my Twitter, you would see that FEYE jumped 25%. We made a good $100 or so on that. And the other 14 or so plays are all looking really good too. I would check my Twitter, I would check yesterday's video. You have time before the market really takes off without you to hop into those. Today, my teaching degree will pay off for the first time in my life. Publix is hiring a manager for $55,000 in Georgia. I'm just kidding, I love my job. But we're gonna break down the 4 biggest stock wins I've had these last 2 weeks: PSNL, FNKO, RIOT, and yesterday, FEYE. Why do they work? What did I see coming from these stocks that would have made them jump so high? We're gonna break that down. I have about 6 to 7 points in 2 sections to break down for you. We're gonna go very slowly and break these down the way that you need to know how to do them. I'm gonna do it with you. All my charting's taken away. Everything that I have done to build up to it, I erased. We're gonna go through it together like it had just happened. Let's get into it. I bet you didn't know I had more than one intro. Let's go. Hey y'all, so this is Apple. As you can see, this is what you're gonna see when you join Thinkorswim for the first time. You have volume and you have the price action. Can you successfully trade off of this alone? Sure. Is it easy? No. So we're gonna add some studies by going to studies, edit studies. The first one we're gonna add is our exponential moving average. Just type in EXP, find this, hit it 3 times. We're gonna have 3 lines. The reason I use 3 lines is 1 is 10 days. What it's gonna do on the time chart that you select, if you choose, like I use the 180-day 4-hour candle chart, it's gonna take the last 4-hour candles, right, 10 of them, 10-day line, show you the average of them, and place a line. If the price goes up, it takes the next 10 of these candles, it adds that and takes off the last one, and it moves the line up, right? So it's going to give you an average of what the price action has been the last 10 days. We're going to do a 10-day candle, 50-day candle, and a 200-day one. Let's get it done. So we have our 3 exponential moving averages. We'll make the first one 10. I personally like using blue because it's what I'm used to, and I don't like change. We're going to take our second one, and we're going to make that 50. For 50, I like to use purple because it's also a pretty color. And then for the 200-day, I like to use red because it's kind of a serious color, kind of a serious tone. If I hit apply, now you can see our chart has 3 beautiful lines on it. If we zoom in, you can see the 10-day is the most dramatic and drastic, just like me in real life. And it's going to follow price action the closest because it's the last 10 candles. It's much more volatile and things like that. Our purple's in the middle. It will follow direction, but it's a little bit slower moving. And then the red one, of course, is the big one. Should be taken seriously, and it's very, very hard to break through and break above. What we're going to add next is our RSI. RSI is going to show us when a stock is oversold or overbought. It just basically shows you a good deal. We also have our stochastic, which is the same exact thing as RSI, but the stochastic is really good for showing divergences, which we'll get into. And then we have our MACD, which shows crossovers of positive volume and negative volume. We use these 4 things. As you can see, we have our chart, which looks a little bit more compressed now because it's less, less room, but we have all these indicators. Now this may look like a lot, but we're going to break it down for you today. You'll be okay. The next step is pulling up our first chart and going through it. So here's PSNL. It's been on my watch list for a long time. Where this line is and this X, this is the play that I made. I don't want to focus on this. Everything left of this is what I want to talk about, as if this never happened. Let's talk about what I look for in a stock. And this is going to be a pretty big list. At the end, I'll make a compiled list for you. But for now, let's just go over what I want to do. First is I want to find my areas of support and resistance. What I'm about to do is I'm going to find areas where the price action goes up and then comes back down. I want to find these areas because if the price has a hard time breaking a certain price point, that's going to help you design where your risk is and what your reward can be. If you know that your biggest resistance and the only one in the way is 15% away, you have a pretty big bet saying, hey, I think I can make it 15% before any kind of bears come in and push this price down, right? So what I'm going to try and do is put as many support lines and resistance lines that are very evident, and the main goal of this is not just to muddy it up and have like 100 of them. I want to have 5 or 6 pretty good ones, and then the secondary goal is to find as many of these channels where it succeeds 100% of the time, going from support to resistance, support to resistance, support to resistance. If it has a bunch of success rates, 80%, 90% success rate from support to resistance and resistance to support, that shows this is a strong channel. You can then accordingly plan to come in right at support and go right up to resistance. Very easy moves. So not only trying to find where these price actions bounce off of each other, we're trying to find successful channels while doing it. It's not that hard. Let's look into it. So let's look for some supports and some resistance. I always use the 180-day 4-hour chart because I like to be a broad kind of move on this. If we're looking at this chart fully, what we want to see is where price action stops and where it starts. There's some really evident ones. See how right here we have, I'll just make a little line real quick. These are kind of hard to do with the mouse that I have, but it's okay. Right there, okay? Look at this. Price stops, it challenges it again, it challenges it again, it gets rejected, right? Do not focus on the MA lines right now. Let's focus just on support and resistance. It comes down, it tries it again, it doesn't succeed. It tries it again, and it blasts through it. You're going to see a consistent theme that whenever a support or resistance gets broken, most times it's with quite a lot of force. Again, it tries it again, it blasts through, and now it's testing it again. That's about 5, 6, 7 good times of testing. That is certainly a support and a resistance. If we look lower, you can try and see maybe right here, we have price action again dying right about there and kind of bouncing off it again. There it is, right? So you can see bouncing, bouncing, bouncing. It blasts through, right? It bounces again. So it got tested about 4 times. That's really good. That's pretty significant. If you scroll a little bit farther down, let's check it out. You could argue probably right about here is probably a support and a resistance area. Now it never got tested again. It never came back down. It just kept going, right? Which can tell us maybe the MA lines played a role. Maybe there was some news that sent it off. That's definitely going to be a resistance historically. If we come back down here again, you could say this is a support or resistance. You could also bring it up a little bit and say that this is a support and resistance. I'll show you real quick. What I like to do is I'll go all the way to the red again. We have testing, some muddling around, red's going back and forth, testing, and then we have this bump and this bump. Not really reach it, but this one does. What we can do, you right click on it and say redraw as a channel. You can now kind of encompass this whole entire move area. I'd say anywhere probably right about there. As you can see, now we have a channel instead of a line. This is now considered an area. I'll make it a different color. I always use gold for my channels just because it kind of switches it up. It's a color that I don't really use, so it stands out more. And now we can see historically if price enters this area, yeah, it succeeds 100% going one way, obviously. But again, we have no idea which price direction it's going to go. It can go up, it can go down, and it covers both support and resistance in this area. There's not 15 different lines. It really makes it look nice. So if we scroll back out and we kind of get the whole area, we can see every single time where there's a lot of price action stopping and going, we have a support or resistance. Of course, there's other ones. If I wanted to zoom in a little bit, I could definitely find one probably right about here in this area. If you want to do a little cross section, you can go in right here, set a line. That's obviously close to a line as well, but again, then we kind of have these candles which are kind of in purgatory. You don't really like to see this, but again, this is a good channel. Another strategy that you can use if you're having kind of like a middle ground one is you can make it a dotted line by double clicking on it. This way you can kind of differentiate, be like, this is a channel, strong resistance, strong supports, and then kind of like a, hey, price action may bounce here kind of line. That's a good differentiation. Now again, this is a clean looking chart, right? We don't have a lot of, nonsense going on. It's super simple to read. So now that we have our resistances and our supports all laid out for us, we know where price action is going to stop and where it's going to start. One more thing I think is important to do. I want to track how long it takes from peak to peak. So you can just click above a peak and go to the next one. 13 days, okay? From here to here, it doesn't say because I'm stupid. We have about 12 days. From here to here, 16 days. From here to here, 22 days. So again, we're thinking for a full move from peak to peak is 12 days, right? From trough to trough, here to here, 14, here to here, 13, here to here, 24. Okay, so we're looking at about 2 weeks. And then again, you can always just kind of track peak to trough as well, right? That's not helpful up there. 5 days. From here to here, 6 days. From here to here, 7 days. 11 days, right? So we have about a week per swing movement. Not many folks do this, but it's a really easy way to tell when and where your alerts are going to go off and when and where you could enter. If you know it takes about 7 days from peak to trough and you're about 4 days into this movement, you could safely wait a day or two at least and then check back on it, right? It's important for you to do that and organize in your head. All right, we have a 3-week swing. It takes about a week to drop. I can wait a week to get the best price. I'm not in here going gun-ho. We got to wait for the best possible price and follow the price action. So 2 more things to point out. I want you to understand when you take on a trade, how much movement there is in one day, right? Now what you can do is you can literally zoom in and you can find a candle, click on it, 3%, 3.86, 3.36, right? 6%, right? That's a fine strategy if you want to do that just to get an idea. What you can also do is go to studies, edit studies. You can then type in ATR, that means average true range. Click it and hit apply, and now it's at the bottom. What this will show you is for a certain time period, like if I want to know this area, whatever this number is at, so right now it's at 1.10, that means that the average price change during the day is $1.01, right? Right now it's at 1.1, and so I can expect in this time area, the price change will be about, $1 and some change, right? Something over here, like this big candle over here, as you can see, it changed $1.14 on average, because again, it's taking all the past 14 or 15 candles and averaging them. That's why it's kind of a little bit of a lagging indicator. It kind of changes as the day goes, a little bit behind. But again, you can average $1, and that's what you're risking when you take on this play. And it's nice for you to know these kinds of things. The last thing to look at before we move on is how long do reversals take? Something that's not really talked about. Here's a reversal right here. As you can see, you track that. That was about a 7-day reversal. That means you had a whole week, Monday through Monday, to track this. Right here, this reversal technically started maybe about 3 or 4 days. Another week right here, maybe another 4 or 5 days, another week. Right? And so you can plan accordingly while you're charting these to be like, hey, I know it takes 5 days to reverse. It's day 3. I can relax and make sure price action is confirmed for me. That's never a bad idea. Over here, you can kind of see a lot more jumping up and down sporadic, maybe some more consolidating, like in this area. That's a whole different topic. But again, it's nice to know how long reversals are going to take. So, on to our next few points. You want to know the overall direction. This is fairly obvious. Usually if the price is above the 200 MA, it means it's going up. If it's below, it means it's going down. Again, you could also chart this out pretty easily and just see it's going up. I mean, 1030 is lower than $26, so you know it's moving up. That's important to understand. You also want to kind of understand what kind of trends we're going to be seeing. You can go back, there's plenty of them. I'll cover the few that I really like. There's 3 kind of trends that I really trade off of. The first and most important is ascending triangles. Ascending triangles is when the resistance stays the same, but then you have bulls buying higher and higher and higher. That's just showing price strength. I really enjoy these plays. They're probably my most prolific and what I use the most. Those are my favorite. Second are channels up, just like how this stock has kind of been channeling up the whole time. It either rides a 200 MA, a 50 MA, or it just has its own little area of value that it goes up the whole time. Those are great. The downside of those is what goes up must come down. There's a high chance that will eventually break, so it's not guaranteed, but neither is any other trade, but it's a great setup. The third is a strong horizontal channel. If you can find these where it just goes support, resistance, support, resistance, support, resistance, you can't mess it up, right? The best thing about these three trades is that our risk is very small. If we wait for the proper channel to present itself and we actually let the pattern develop, you'll have very little risk, because if it breaks, you're right at the bottom. It breaks down, you just get out, right? But the potential and the reward is very, very high. I'll show you these right now. So we can even see in this stock itself, we're going to keep the support lines because those are important, but we're going to use gold to determine what kind of channels and trends that we have. I can already notice off the bat, if we kind of go over here, we can see that this area may be, nope, not really, that's okay. So looking at this, we can try and find some really good channels. Right here, back in the day, you would have noticed that this was an ascending triangle. You can just mark this gold, find that, oh boy, and you can see that this resistance right here stayed the same, right? It tested resistance, it had a higher low. Tested resistance, it had a higher low, and it blew through with force, right? That's what I really like to see with these kinds of things. You can also see maybe like right here and over for a few weeks, we had a really strong horizontal channel. That was really well to play off of. You can come over here and you can also start doing things like attaching peaks to peaks. That's a descending triangle, obviously. And as you can see, when it broke out, it tested it again, and then it went up, right? That's another play that will develop with your skills as time goes on. But as you can see, your supports and resistances are not trend lines. These are where price action stops and starts. But then within these supports and resistances, you will find things like ascending triangles, ascending patterns, things like that, right? And so I guess just to have them on here, that's definitely ascending triangle right there. We'll make that gold. That definitely played out really nicely. This is definitely a descending triangle right here. That played out really nicely as well. I got the right one. Oh boy. Right. Those are all really good. And then even as of recently, you can kind of make this a channel if you wanted to. But all we're doing is finding our trend lines. Then you can look for patterns. There's plenty of really great patterns out there. You have something like this. This is definitely a double bottom, right? When the price action taps twice, it takes off. That's definitely a great sign. You also have things like double tops, this, right, where price action kind of gets rejected. There's not many patterns within this one, but I definitely saw before I bought in this right here on the 180-day chart to have a perfect double bottom. It's quite the rarity, and so you match that with the support area. That's a lot of great price strength, especially if it broke above this, which I saw, and it did, and it came down and tested it, and it launched itself really, really well. That's a great sign in itself. So looking at the price action of where I kind of started watching the stock. Now you can use the RSI. It's a little bit harder to use in this kind of time period. I'm going to kind of back out a little bit. You want to make sure the peaks look good. Okay, this looks pretty good. If I come over here, and I see right here, I connect these two troughs, right? Let's connect them. Right, we kind of go right here, because again, I want to go from right here to right here. As you can see, it's very, very showing of a double bottom. If I connect down here to right here, the same price area, that's not the same, okay? We have this right here from wick to wick. That's a double bottom, that's a straight line. But right here, it's showing that it's not the same. That's a sign of a bullish reversal. You can do the same with the peaks right here. Let's take this peak right there. Let's go to this peak right over here. What this shows over here, though, is a straight line, right? This does not match what's happening over here. Like I just said, you attach peak to peak, though, that's a sign of a bullish, or of a bearish, sorry, of a bearish movement. As you can see, it kept dropping down. Now, you may not have known any of this buying into it and been just fine, but you can easily go through this whole stock and a lot of these stocks and connect peak to peak. One thing that I do not do is I will not cut through stuff. If I want to like see like here to here, I can't do that. It must be a clean, visible way across on both of them. So I can't just go like here and be like, well, is this going to be one? Well, no, you have to kind of move over farther and make sure they're attached. But you gotta connect peak here to peak here. So you have to kind of go over here and be like, that's the peak right there. And if it's not a clear line, you can't use it. And again, this is a little complicated. If you follow my Twitter and my posts, I do this for you. You don't gotta worry about it. But it's very clear by yourself. If the price action and the stochastic do not match, it is a divergence. If it's peak to peak, it's bearish. If it's trope to trope, it is in fact bullish. It's very useful for reversals. Match that with volume and RSI. You can call these like a champ. So that's RSI, that's stochastic. And then MACD, some folks use that for entry points and confirmation of when a price action is moving. The issue with MACD is that it is a lagging indicator. It kind of happens and goes off a few hours later. I use it for confirmation after I put my money in. If I put a put right here and then it goes up like it did, I just use this as an indicator that, hey, all these green bars shows that what I thought was going to happen has happened. When the blue line crosses the yellow line, that also shows positive price strength. When it crosses back under, that shows red price strength and bad price strength. Given all these things put together, what happened? So we kind of come over here. I notice a double bottom. This double bottom also matches up with going from here to here, not matching up. So we have a triangle. When you break above a triangle, that's a great sign. From a double bottom, an area of support, and it has divergence. Well, I place my money really quickly for sure, which you also saw that I can extend over really quick. Then that, as you can see, it's also kind of coming into an area of a trend line, kind of like its own little triangle. I saw that. I put my money right here. It kind of came out. I waited, and then the next day we had a run of 28%. As of currently, I bought in again here. I wrote it up again another 25% because of this trend line. So here's RIOT. If you were to zoom in on this, you can see it has fantastic peaks. It really drops and goes up quickly. I really admire that when this happens. It really bodes well for price action. Let's go through this again. Let's find our supports and resistances. Obviously, you have a resistance here at the top. Let's just kind of scroll down, right? You can put another one here, but what's kind of the point, right? Come down a little bit farther, we'll see this peak right here. It doesn't really match up with anything. But if you go down a little bit farther, well, this does. This matches really, really well with that one and that one. And I guess you can consider this one the same, and that's quite all right. We go down a little bit farther, we can kind of see maybe in this area, maybe right about, you'd say probably right about here is a good line. You have a bunch of price action in here. It bops right about here, it bops right about there, it bops right about there. Again, is it perfect? No, it never is. But I'm not going to split hairs and lose sleep over it. I think right here is another really good one. Maybe a little bit higher, maybe a little bit lower. Let's just go with right about there. Boom. Right about there. Right, we have 100% success rates right in here. It looks really good for a channel. We have another really strong one based off of these wicks right about here. That's probably all you need. I mean, you could definitely do some lower ones, but given the recent price strength, it doesn't really get that low. Maybe you want to kind of come over and you can kind of say, all right, well, this right here, nope, yeah, this right there and over is definitely an area of support. So let's go through this. That's our support. That's our resistances. Let's track some peaks real quick. So from this peak to that peak, 11 days. This peak to that peak, 12 days. This peak to that peak, 10 days. All about the same. That's a great sign. We want to do move to move. This bottom to this top is 4 days. This bottom to this top, 4 days. This top to this bottom, 4 days. Again, this is a very consistent move. Every 4 days, we can make some profit. If you want to do the candles, you can. I'm going to skip it because I already did it once. Reversals seem to take maybe 1 wick taps, and it really kind of slows down here. But again, we're looking at really, really fast reversals, right? Which means our money's not tied up as much. If it takes more than a day, we can get out, and we can be okay with that. We zoom out to the grand scheme of things. As of recently, the price action has been up. I can connect this to that. That shows that we have price action moving up fairly obviously. Are there trends in here? Well, I'm sure, right? What we see is what I played off of actually was right here. I saw this, I saw that, and then I saw this 200 MA come into play. That's definitely a channel up looking kind of thing. That's its own trend line. We saw that. We can also take these peaks and we connect these peaks. They're really evident on this one. You can see it hit down right actually into this right here, and you can just draw that if you'd like to, right? And so we're just kind of seeing some areas that this worked out really well in. There's not many trend lines, there's not many patterns in this one. This was more of a support kind of play. Channels, as we can see, there's plenty of great ones on here. So we kind of come over here for risk versus reward. You know, we have, this is where it was happening. We got a good amount, 11%. I can then sell below these 2 lines. If they do not hold, I don't like it. That's all good to go. With this, we can also see our RSI right about here was about 40. At this point, yeah, it was about 38, which is oversold. Historically, we have great action at 38 or below, 40 or below. That really helped me buy in. Again, we look at divergences. Let's see if this had one. It didn't, right? This is higher to higher. That's higher to higher, right? So I did not see a bullish divergence at that point. So that did not count for this one. And we see the MACD at this point lagging, but it's kind of crossing, right? This play was based off of our 200 MA being right there, which is a very, very strong thing to break, as we talked about. 1, 2, 3 hits. I figured if it hit the 3rd time and went off, it would be a very, very successful run. I'm gonna get rid of these real quick. As we can see, it did hold here. Support plus trend line plus 200 MA. A great bet right there. They went up, it went up, it went up, and then did I expect this to happen? No. Did I plan on this happening? No. What I was hoping to happen was that I'd get it right about here, which I did, and I sold it because I hit right here and I saw red come in. And I mean, I'd rather take profit than nothing. And then all of a sudden, it jumped up 119%. Did I plan that? No. But what I did do was put myself in the position to be successful. What I should have seen is that this is also an ascending triangle in itself. I could have called it, but again, I wanted profit. So I missed most of the big jump. And that's okay. What I did get was 25%. You cannot complain about results. Funland, oh boy. Let's look at this real quick. Again, such beautiful peaks, right? We're not looking for crazy amounts of movement. I don't really love really strong channels up. This is so easy to break down, right? We definitely have some resistances right here. We definitely have some at this area. And again, you can put them here for these 3 first ones. I'm gonna raise it a little bit because I really look for the newer movement compared to old movement. These are much more relevant to me than the older movements. You can definitely say right about here, you see this gap. Gaps are kind of a big deal. You can kind of use those too to track these. This gap and these wicks, I mean, these are, they break above, but the bodies stay below it. That's really significant to think about too. This is definitely going to help us build a channel right here for a lot of really good 100% moves. You put that right there. Of course, you see there's a lot of action that stops here, a lot of action that breaks through here. And then, of course, you can drop down maybe a little bit lower to really give this area some body and really show some great price strength and some great supports and resistances right there. And that's about it, right? We have a lot of moves that are 100% successful. You really like to see these kinds of things. It's super easy to read. From there, again, let's just test some peaks from here to here, 7 days, from there to there, 15 days. Let's see, we got another peak right here to here. All right, so this one's a little bit more sporadic, right? But take that into consideration. Our reversals take some time, it looks like, right? It took about 5 candles to reverse, about 5 candles, 6 candles, a good 9 or 10 candles. This one also had a bunch of candles. So again, we can kind of think if that we have a long transition here, we should expect that. Let's look up to the our kind of trend lines. Here's what I saw, what I played off of. And kind of connect these. And the first bounce that we got was at this support, which is also near the 200 MA. And you really like to see that kind of bounce happen. Let's remove this. We can have a nice visual. Right, so we see this happening, we see this developing. Now, I was gonna wait. I bought in right here. I was gonna wait for this. The reason that I didn't wait is because of something we haven't talked about that much yet, that our 50 MA and our 200 MA. If we zoom in, you can kind of see that the price action really seems to respect this 50 MA, right? It really seems to like to bounce off of it and ride it, and same with our 200 MA. But as we kind of break farther away from the 200 MA, we'll see that even down here, it really bounces off of the 50 MA. And then even closer to over here, it bounces off of the 50 MA, right? So initially, we buy in here, we sell here. I see it coming down, and then again, we can kind of do a divergence look. I don't see one. This is higher and that's higher. So that in itself was not visible to me. What was visible was that it takes about 5-6 candles to reverse. You have this nice little reversal right here. I bought in right here, ran it up another 15%, right? So we used our EMA lines for this particular one and our history of how long reversals take, right? This was a great play. That's how I chart it. It worked out really well. What we can see here again is some really great peaks, some really great price action. This may not be the play for everybody. Some folks really like channels or more respective MA lines. I really just like price action. So let's look at what happens here. This is kind of get a good encapsulation. So again, we have resistance up here. That's pretty obvious. It hasn't really come into play yet, but we'll mark it for future reference. We definitely have a resistance somewhere around this area. This can definitely be considered a channel as well. You want to kind of put one maybe right about here, right? Because we want to get as many 100% successful moves as possible. We can redraw as a channel right about there, you know. And again, I'll make this a different color so I know, hey, in this area, rules don't apply the same as a different area, right? We could also probably put one right about here if you'd like to for the newer stuff. Then we have one very visibly right about here from these peaks back here. And again, it bursts through with strength. That really kind of shows an area of support or resistance. And it bounces around here. It's a great line. Looking at it even further back, yeah, you could probably put one right about here if you'd like to. The only thing that I don't like about that, is that we have quite a lot of price action that kind of comes into it and doesn't finish off, or maybe a little bit below that. But again, we're splitting hairs at that point. Let's not, lose sleep over a few percentage points. It's okay. And then lastly, this one kind of goes back a good distance. Is right about here. What a fickle mouse. That's it. This one has quite a lot of levels. It is a lot, but that's okay. So we come over here, we can kind of see reversals take a long period of time over here. Our peaks do not seem to be very, very coherent in the same amount of time frame. It seems to take a long time for things to happen, and that's okay. What I usually do is I'm going to take rid of this one, and I'm going to keep that, but I'm going to get rid of this one too. That's so many lines. This also doesn't matter for what's happening right now. These are our levels of what we're dealing with. So what did I see? Get rid of these, because this is what happened. I saw this. I saw you attach this right here to that right there. I saw a possible trend line developing. Now what I usually do with these kinds of channels, because it's a new one, I will click it, I will redraw as channel, make it a little bit wider, just so I can encompass some more moves. Get rid of this for now. And as we can see, we have a lot of price action bouncing up and down. We don't know which way it's possibly going to go. But again, it really respects this 200 MA. It breaks through it, it gets stopped there, it busts through it, it stops there. We have a 200 MA meeting up with a channel and an area of support. Now it hit down over here, and as you can see, our stochastic gave us a great indicator. Look at this. It goes up, but you come back here, we have a long-term, because there's nothing else in the way, a long-term divergence, right? I like to see that. That's a huge one. Those are hard to find. We saw that. We called it. RSI is also oversold. There's a lot of success when it's below 40. We bought in right when the channel hit, and then last night we see a skyrocket of 23%. I capitalized on about 18-19% of it. It was a really good move. Was this a long video? Yes, my throat is quite hoarse, and that's okay. What I hope you learned are the way that I go through historical aspects of charting, and then I use my technical analysis to make really good plays. I've never had anything last more than 35 minutes in my life. Well, besides... So, that's it. I promise to have more videos coming soon. They're going to be live updates on Facebook and on Twitter. You can follow us there. If you like this content, please subscribe. There will be shorter videos. I wanted to go really far in depth today to give you guys a very, very precise breakdown of what I do. I encourage you guys all to take an investment in yourself. We're going to balance our risk versus reward and keep making winning plays. We'll see you guys next time.